Hi guys, I'm Steven, and today I wanted to talk about the Federal Reserve Chair change that's coming up soon and how to prepare for it with equities, gold, and crypto. If you've been paying attention to polymarket data, you'll see that recently there has been a big change, which is that Rick Rieder is now the front runner. And as we approach the deadline for this change, I think it's increasingly likely that he will become the chair. And with that, for better or worse, will come reduced interest rates set by the Federal Reserve. So we need to ask ourselves how to prepare for that in the future. Obviously, gold has had a huge run here over the past year, 70%. Crypto in the past year, on the other hand, has basically been a negative 15%, and equities have done pretty well as well. So we want to ask ourselves what the next chapter looks like. Inflation is a very complicated subject, and I definitely do not know all the details, but I think the conventional wisdom that the Federal Reserve interest rates are significantly affecting inflation are a little overblown. I think inflation took root during the pandemic all around the world, and disinflation has been happening all around the world at the same time frame. And it seems to me that it's happened in a little bit independently of what the Federal Reserve policy has been. And so, I think some of the conventional wisdom about what might happen going forward is potentially wrong. So let's talk about day one when the Federal Reserve chair changes. I think at that point, there's a possibility that all three asset classes, gold, crypto, and equities, could potentially all go up at the same time. Obviously, with lower interest rates means easier access to capital, more liquidity. Typically, that benefits equities and usually also crypto. At the same time, Rick Rieder has publicly stated that Bitcoin is a valuable, durable asset class. So there's a very high likelihood that those two asset classes will rise. At the same time, with regards to the conventional wisdom that reducing interest rates can cause inflation to increase, gold would have a natural place for some investors at that point too, as a hedge against inflation. So initially, I think there's a high likelihood that all three will do well. Now, over the next few years, the question then is what will happen? So it really depends on what you think is going to happen with inflation. Some people argue that if the Federal Reserve reduces interest rates, that contrary to popular belief, inflation could actually possibly temporize and reduce itself. And this is because of housing costs, borrowing costs for housing, as well as potential easier access to money for small and medium-sized businesses. With higher interest rates, it favors large cap businesses as opposed to small cap and medium sized businesses because it's easier for them to get capital relative to smaller businesses. So potentially with a Fed that reduces interest rates, inflation may not actually increase depending on how you believe things are going to play out forward. So if you believe that inflation is going to stay stable in spite of the Federal Reserve interest rates dropping, then crypto and equities are going to outperform gold in the next few years. If you believe that inflation will continue to increase and or worsen with the Federal Reserve dropping interest rates, then you're better off buying gold. Personally, I have a bit more of an optimistic view. I think that inflation is relatively stable in spite of the Federal Reserve's recent reduction in interest rates. I think globally, there have been very similar trends, and regardless of the Fed policy, it seems pretty consistent that the inflation is moderating. But again, history has shown us in the past that when the Federal Reserve acts too quickly, inflation can go up. So time will tell, but I'm putting more money in equities and a little bit of crypto now than gold personally. But again, we'll see what happens in the future. That's all for today.